Mel Lopez, Chief Economist for ASEAN.
Hello, I'm Peter Lundgreen. I'm the founding CEO of Lundgreen's Capital.
Welcome to Sound Economies with Mel and Peter, an East Meets West podcast by Lundgreen's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Peter, it's nice to see you here. Welcome to sunny Manila, and it's a literal East Meets West session that we're having today.
It is, yes, thank you. And it's so great to be here in Manila. And it's our first video podcast together. We're doing it live. So normally it is just a normal podcast. So it's fantastic to try it out with a video and to have conversations this way. Very nice.
Yeah, and I wanted to ask you, how did you spend your holidays and what have you been up to at work so far?
Holidays are always nice, and it was a long holiday this year, so there was good time at home and also time to look into this year. I think 2025 will be volatile in the financial markets, as we'll talk about today, but it will also be a busy year for Lundgreen's Capital, so preparation is good and we are ready for the year. What about you? How did you spend your holiday?
Oh, I spent it with my family, so Christmas to New Year's, and then coming back to Manila and getting back to work. A lot of publications, so we're lining up a lot of articles and our quarterly magazines, maybe a new one, considering, yeah. So all of that's available in our Lundgreen's Investor Insights website and app. So let's jump right in, just to do a quick run through. So today we'll discuss what we think are major market movers in 2024 and how they play out this 2025. Yeah. And then we'll go right into megatrends. So we call it 5 for 2025. So 5 big market events or market developments that we're gonna monitor. And of course, as usual, we do our global outlook and share our house view here at Lundgreen.
Okay, great plan. Let's get started.
Yeah, Peter. So for the major market movers in 2024, I think it's really worth mentioning China. So it's a major economic slowdown that we saw. And then, of course, it's still the property market slump that's been keeping domestic demand depressed. But the development that was really pivotal to markets was the government, the mainland Chinese government's response, like subsidies, additional government debt that they allowed for bond issuances just to perk things up a little. Because while we know that it has hampered China from achieving the 5% GDP growth target so far, and from the data available in 2024, that has spilled over to global markets. So China is a major consumer market for not just for China, but basically for everyone. And we see from fashion brands to other retail companies citing that they are unable to meet sales targets, revenue targets, because people in China are reluctant to buy. So it's a major development in a sense that the second largest economy is slowing down a bit, although still growing much faster than major economies or mature economies. So it's very interesting to see how these subsidies work out. So we know that it's been announced September, October last year. And of course, it takes a while to kick in, to operationalize the budget. Of course, the subsidies to trickle down to who they need to reach. So that's something I really want to see unfold this 2025.
Yeah, it'll be interesting. And of course, January will be interesting. Trump taking the office. We'll just based on that. But we're all anxious to see what happens on the tariffs.
They're anticipating that so much because so far in the first couple of days of 2025, Asian stocks, mainly Chinese stocks, are down because they're really counting the days to Trump's return to power in the US. And of course, that mega tariffs that he plans to unfold.
Yeah, that is, it's very decisive, but also actually decisive for what counter steps will the Chinese government choose to take. So it is a bit sort of wait and see on a big scale. Yeah, it's the two economic superpowers of the world that are now in this game.
It's a tug of war.
It will be important for the whole global economy. For sure.
Yeah.
Otherwise, a couple of other interesting, how to say it, developments in 2024. If I look into the stock market, it was, how to say it, impressive. The Magnificent Seven tech stocks could drive stock market so much higher. We've seen US plus 20% here. But it was, of course, also a bit sort of across the world, tech stocks continued higher. A fantastic example is also in the Eurozone. We saw the German DAX index, leading stock index in Germany, almost up like 20%, only due to two tech stocks. But the French stock index doesn't really include a lot of tech, so it was down 5%. And from sort of a global perspective, there's not a big difference between Germany and France. If you're asking Europe, there's a big difference. But sort of really overall, there's no. And it is just this drive from the tech stocks. Amazing, and it will also sort of embed a challenge for investors this year. And we will return to that one point.
Just a bit.
When we look into 2025. Otherwise, another happening that meant we changed our outlook.
Correct. Yes.
On a couple of things was the result of the U.S. election, presidential election. It was not so much that Trump won. The major thing was that one of the president candidates and parties won the whole capital hit.
Control, yeah.
It controls the Senate, the House, everything. Because what we've been arguing, if that should happen, then at a certain time, maybe in a couple of years within the presidential period, whoever had won the office would probably start to issue more debt to the U.S. to solve the demand problem and economic problem in the U.S. And that is, I would say, a challenge. Government debt is running out of fashion. That's one thing. And it actually led also us to say, okay, we will not see the interest rate cuts in that significant way in 2025 as we had expected. And that means that the stock market is missing this tailwind out. And again, also long-term interest rates will level out at a higher level compared to what we expected before the election actually. So that was a major thing as well, and that is pretty decisive also from its development in 2025.
Right. So there's a lot of expectation that higher for longer is the mantra for 2025. So interest rates will not go down as fast or as much as people initially expected. And also inflation is not easing as much as central bankers would like it to be. So going into 2025, that's where we're at. And yeah, let's jump right into our mega trends for 2025.
Let's do so, yeah. How do we sort of say what's a mega trend? What's in our view? Because mega trends can be everything, yeah. But for us, it has, of course, something to do with what has an implication for the financial markets somewhere and for investors. That is a mega trend, and as it says, it has a certain duration. Actually, a mega trend for us can be something we follow and we have an opinion about for several years. We can look really a lot of years ahead, and it's sort of some consistent development we expect to have an impact on society, on global market economies, and of course on the global market, financial market in that way. So this is how we see megatrends, something that has an importance for some whatever reason. And you promised we have 5 megatrends for 2025.
Right. So it's such a nice round number, 5 for 2025.
Let's see what we have.
Yeah. So I'll go into. It actually kind of ties back to what we identified for 2024's major market movers. So the first one I see is the Trump effect into not just to the US economy, but the world economy. So he returns to office on January 20th. So that's a couple of days into the new year. And it is sending jitters to financial markets all over, but particularly in China. So we've seen that unfold so far this 2025. And it's largely due to the tariffs that he has promised. He is now talking about national emergency, declaring a national emergency just to really make sure it happens on day one of his new term. And what we expect from that is a bit of inflation still. So it will undeniably drive up prices. China is a manufacturing powerhouse for a reason, and the US imports a lot from China because it's cheaper. It's efficient that way. And if you impose tariffs on those products, it is gonna be felt in consumer pockets one way or another.
Yeah.
So his administration is of course saying it's not gonna be so bad because they want to remove those fears, but there will be an impact. And by how much is that's what we're monitoring for the coming months.
Yeah, I agree. For 2025, Trump himself is a mega trend somehow. It is a bit unusual, yes. A new US president would normally not has this big impact for the finance markets. But other leaders, particularly other Western leaders, are allowing Trump to set the scene. And I don't know him only from whatever is accessible via medias and different reports. But I consider the man as he likes to bully a bit, yeah, and set the scene. And if he's allowed to do so, he does it.
He gets it.
And it would be pretty easy for Western leaders to punch back, but they don't.
He wants something from Denmark.
Yeah. And now I am from Denmark, and
he wants Greenland from
He wants Greenland, and I can assure that is a talk of town, yeah, in Denmark. It is of course unusual, that countries try to in that commercial way try to claim other areas. It has a couple of it is a complex situation because Greenland is a part of the Kingdom of Denmark, though they do have high independence, they have their own parliament. But it is a fundamental conversation for discussion for each and every country. If a part of the country wants to leave, what they sort of are constitutional member of. If that starts to be the trend, and we've seen other places in Europe, also in Spain, where there's a majority to leave Spain as a province,
right.
Independent. It is not so easy, and that is of course what governments fear, I believe, in general. Yeah, and then there is simply a discussion. So actually, the US for a bit more than 100 years ago, they bought back the Virgin Islands from Denmark with a payment.
Yes.
So we are used to this kind of trades with the US. But it of course has some things to do with the security policy and whatever. Yeah. But it's talk of town and a bit unusual. Economically, it won't change a thing anywhere in the world, but in a big signal, so to say, if that should happen, it's exciting to follow in that sense. Yeah. Otherwise, if we sort of shift back to this, to
our
what has a
megatrends.
bigger effect for the global financial markets. So what we observe is that there is an ongoing global manufacturing surplus as a production capacity. That has been the case since years. And it is around the world. It is not only in China, but China is having a huge surplus in their manufacturing capacity. And it means something. We have seen it in EV, the electric vehicles production, where the German car producers are outmaneuvered big time. As Volkswagen is closing down 2 factories all of a sudden, yeah. That is something to do who understood the EV market better than others, but also something to do with cheap production capacity.
Yes.
And also solar panels, all this stuff, yeah. So this is a situation we see will be ongoing, and it is again shifting over to another megatrend, and that is in pressure in the old economies on where typical middle class people are employed.
They're very squeezed right now.
They are simply squeezed from all around the world in many situations. So surplus manufacturing capacity should actually hold down inflation a bit for that part of the world. Yeah. So that risk will continue. But to jump into the inflation conversation, and that is another mega trend, and that is also reaching out so further than 2025.
Yes, correct.
Is we consider inflation as not under control. Say it this way, it is around. If we look around the globe right now, it is somewhat okay under control, but it just feels like when we look into the components and how the inflation develops, it doesn't really come down to where the central banks are happy.
Correct.
It has a spike up risk all the time. And we see, if we see inflation development away from the level we see now, that is more small spikes upwards instead of getting it really down to where central banks say,
good to cut.
Yeah. And that again mean interest rates and interest rate cuts are less likely. In Europe, there's a lot of talk that the ECB should lower the rates to just extreme low again to support the economy. That would be extremely irresponsible to do so. On the contrary, they can't lower rates as much as expected because inflation is not that much under control.
Correct.
That's one thing. And secondly, if inflation is too high, then it limits government's maneuver possibilities when we're talking about the fiscal policy.
Yes.
If governments tend to say, okay, we spend more money, as is a discussion in an election campaign in Germany right now, how to get the economy started, and that is to do more public investments, very classical and wrong way of doing economic policy. Even the Chinese have learned not to do so. But if that is sort of a solution, more government spending increases the inflation pressure, because if inflation is already, as we say, sort of to the upside.
Yeah.
And if more public spending is pumped out of the system, it would increase inflation even more, and it would be bad for the economies, and it would be bad for households. So that is a very important megatrend to have in mind throughout 25 into 2026 in the long way.
I'm also thinking, going back to our Magnificent Seven story earlier, tech is what's really been an exciting sector for 2024, and I see it continuing, the story continuing this year, 2025. So a lot of tech stocks showed like 200%, 300% growth from last year. And a lot of the action there is going to drive stock markets this year, despite the uncertainty. Of course, we anticipate AI developers, big tech developers to continue the rally. In terms of electric vehicles, there could be some big winners, really big winners, and then some losers as far as traditional car makers are concerned. And maybe alternative investments could be on the rise as well. Maybe 10 years ago, we think tech is an alternative investment relative to property maybe, or other commodities. But now it's very, very mainstream, Peter.
Absolutely, yeah. Just to take off with the tech companies, it poses a challenge this year for investors, actually for all of us as well, looking into building portfolios. Tech is taking up so much space, also in normal stock indices, that an investor to forecast sort of the stock markets as such, or the global stock market trend, is almost like having a forecast of the tech sector. It is the most dominant at all by huge, and that is making things more difficult, and it is an implicator of saying the market will be much more volatile in 2025 because it will basically swing with the tech stocks.
Tech stocks, yeah.
So that is the difficulty. We have, if we go back sort of time, as we have seen it before, just within the last 25 years, that still includes a .com, was in 2001. where tech stocks, but in a very different way, also drove the market. Yeah, and then that really went into a bubble. Are the tech stocks driving towards a bubble? I'll say not yet, but big swings could be there. So that is a complex situation, and sort of coming from 2024, taking into this year. And then if we talk about sort of other upcoming sectors, but in Europe for sure, defense is an upcoming sector because European governments are forced to spend so much more money on defense.
Correct.
And here, of course, we have a sort of a Trump factor as well, yeah. But that is outspoken in Europe. And the problem for investors is that in the listed market, there are not a lot
of options.
Defense companies to buy. An alternative, and that is when we're talking about alternative investment, is to go out in the non-listed market and invest into defense companies there. We think it would be a big thing. That is also why we have opened up our own high-tech defense stock fund, alternative investment fund in 2024.
Yes.
That's performed very well so far, very active. And we have a big investor interest in that fund. And that is the way to try to shortcut into to get some a bit cheaper defense stock. Sorry. So yeah, that's a sector in 2025 we see.
A very quickly developing sector, yeah.
It will be, yeah. So that is very exciting in many ways, of course.
Let's head to our global outlook, Peter. We do this regularly, so I'd like to ask you your long-term view on the markets for 2025.
Yeah, so we still like risk. We're talking about how to say it. The market's getting more volatile, and that, of course, also indicates that positions might swing more in value. But we still see enough sunshine in the global economy, in the markets, to have more than average risk. As usual, like we talk about, there are a few more clouds on the horizon for the global stock market. But if we look sort of the next 6 months, we are okay right now, having, again, an overweight into stocks, into high yields in the fixed income.
Yes.
The duration, we are sort of in the middle. That one we cut down.
From last
after
year.
the election, in US. One interesting thing at this entry point to 2025 is actually that the US dollar is very strong. In our view, is trading at the very, very high level of what we could see as the broad band where it is moving in between. And it is strong against all currencies. You see it against the European euro and other European currencies, actually across most of the world. And why is that? Yeah, part of it is actually that the US interest rate won't go as much down as expected. So it is attractive to place money in your money in US. But another thing is also some trough positiveness. Actually, it's what we consider is part of the strong dollar. And will that continue? We argue it's more likely that the dollar will lose steam, and it could actually lose 10% this year.
10%.
Yeah, and instead of continue the upward trend, people would probably realize that the Trump economic policy, it won't work. What is it that won't work? Yeah, it's a U.S. middle class who has voted Trump into the office to fix their problem. And the problem they have is that their income is squeezed. And this, whatever initiatives you look into from the Trump suggestions, it won't really help the middle income classes. The only thing that could help the middle income in US is global growth. If global growth really takes off, then it helps. So Trump needs to open up everything, do exactly the opposite of what he is proposing, and get global growth to hammer up. That would generate so much more activity in the US and US economy and help the middle class income, and that is the only solution. If we go back to the megatrends, that is also where we say, as probably the economic policies won't help the middle class, and that's why in 2 years' time, it would be tempting to issue more debt and simply spend more money U.S. government will simply try to support the economy by taking up and more debt. So this bit more realistic outlook for the U.S. Will probably send the dollar US lower. Is our expectations. It's not so often we cover the currencies as such
extensively, yeah.
But the US dollar swings are important for also the pricing of emerging markets assets. And apart from the dollar influence, what do we say, Mel?
Yeah, so for stocks, global stocks, as we expect, technology stocks, the tech sector will really remain at the front row of all the action. It's gonna stay as a key driver for U.S. stocks or for global stocks even, especially at the time of great political or geopolitical uncertainty. So the Trump effect could go two different ways. So as we mentioned, like it will give an initial boost to the US dollar, but as far as global economic policy is concerned, if the trade war and the protectionist policy towards global trade persists and really unfolds, it's not gonna sit well as far as inflation is concerned as well, because it will drive prices up because you want more trade. You don't want less trade because everyone's not better off with less trade. So that's one of the major sources of uncertainty and volatility coming into 2025. But as far as markets are concerned, we remain optimistic towards this side of the world. So China, for example, is growing a bit slower than what people are used to, but it's still very much faster than the rest of the mature economies. So there is still a lot of opportunity for investors to participate in that growth. And as far as Southeast Asian economies are concerned, they're developing. Here, Manila, it is a developing economy still, but pockets of growth are always good. And we like to jump into that action as early as we can so we can cash in on that growth, so to speak.
So we still like to overweight stocks. We still like to overweight emerging markets, especially ASEAN. Also when it comes to emerging market debt. And stable. Its situation is okay. Yeah. So we are happy still. And that's sort of our entry to 2025.
Thank you, Peter, for today's episode. And we will see you and our audience in our next episode.
Yeah, thank you to the audience for listening and view this time. And also thank you to you, Mel, for organizing everything here in Manila. It's really good. And we are back every week in our regular podcasts, giving sort of the best we can about financial markets. Thank you.
We'll be monitoring global developments and we'll share what's interesting in our next episode of Sound Economies, Mel and Peter on the Financial Markets, a podcast by Lundgreen's Investor Insights. We're also available on Spotify.